So in today's trade review, we're going to be going over a trade that I took on Friday, May 16th. If you look to the left, you can see we took a 5-minute high, and then we created a 15-second high, and we swept that as well. So right now we're in a double sweep situation. We formed a bearish 15-second fair value gap to the downside. As you can see, I shorted at it. That price point is 446.50. Now I have my stop loss at the high, and I have my target down at 414. Here in a second, I'm pretty sure I do zoom out and take a look at why my target is there. And see, we get a really nice push to the downside. At this point, I'm feeling pretty good about the trade. You know, it's always good to see an instant move away from your entry in the right direction. So you can see I have my stop at the prior 5-minute candles low. Now that is a first target when it comes to smart money concepts or algorithmic trading. The previous candle's high is always kind of the market's first objective to reach. A disclaimer as well for this trade is I was coming off 2 losses here. So I was down about 200 bucks going into this trade. So when I did place this trade, I was really wanting it to work and to pay out so I could make back my losses and be green for the day. Luckily it did win, and I did make back my losses, and I did end day green for the day. But I went into the trade with the full expectation that I was going to get stopped out and be 0-3 for the day, and I was okay. If this trade did lose, I was going to be done for the day and just call it at that, because losing 3 trades in a row is a pretty good sign that today's just not the day to be trading. So you can see I'm just looking at the 5-minute chart, you know, just kind of clicking around because I'm getting anxious. So during this trade, it does end up running back against me. So I go from green, I go up about, I think I'm $200 in profit to break even, and then to being down about $80 or $90. At this point right here, you know, I was completely expecting to get stopped out. I was expecting just one big candle just to come up and sweep me out. And as we'll watch here, you can see it that doesn't end up happening, but it was messing with me mentally for sure. And that's the biggest thing I've noticed in my trading in particular is I'm really good about letting a trade go against my entry. So say I'm green, I'm in profit, and it comes back, and now I'm red. I'm pretty good of just accepting that, you know. You'll never really see me close a trade out early once I go red. And the only time I ever go to break even is if we take, say for example, I'm targeting 21,400 and we get down to 414, which is like kind of like the first target that I want. Then I'll go to break even if I'm holding runners or something like that. But if I haven't taken any profits yet, there's no reason to go to break even yet. So you can see we start to really accelerate down towards the low of that candle. You can see price came up, I was red, and then we instantly started to come back down. And that's a pitfall that a lot of traders fall into. Is closing the trade out super early once it goes red on them, and then they took a loss when if they would have just held and stayed to their stop loss, they would have won on the trade. But that's it. It was a good 3-hour trade, and it was a good day, and I ended green.